I'm Patrick Camuso, founder and managing director of Camuso CPA. For nearly a decade, my firm has reconstructed digital asset cost basis, done extremely complex digital asset accounting, and defended complex crypto tax positions long before the 1099 DA existed. Today, I want to go over something that almost every taxpayer that's transacted digital assets is going to experience, and that is receiving a 1099 DA. And really touch on, once you receive this 1099 DA, what are you supposed to do to make sure that you stay compliant from a tax perspective and also don't overpay or underpay on your taxes? So let's first get into what the 1099 DA is. When you receive this, it's not an audit notice. It's not an allegation from the IRS. It's not even determining that your accounting or calculations are incorrect. What this is a broker filed informational return. And especially in this first year that you're going to be receiving it, but for many years into the future, it's not going to be a complete record or a complete calculation of your full digital asset history. And we're going to go over the reasons why that's the case. But the key to understand is that the 1099 DA is not fully complete and it's unlikely to be fully accurate for many reasons. So you as a taxpayer are really tasked with making sure that you reconcile this and report it correctly. So, the 1099 DA exists as part of the new broker reporting regime that was put in place as part of the Infrastructure Investment and Jobs Act. So, this is really like a fundamental shift, taking digital assets and putting them into the tax system through, this new reporting framework. And it's designed to start to automate compliance to a larger degree, to start to bring down the non-compliance that's with crypto that the IRS has cited. And also to, do a better job at starting to detect discrepancies between taxpayer reported filings and this third-party data that they're now going to have. So again, this is a broker filed informational return, and the brokers are only going to be filing this for information that they have and that is required for any given year based off of the regs. And it's not necessarily a full determination of a taxpayer's taxable income or capital gains. And it's also not a substitute for the taxpayer's basis in records. So what is actually going to be included in this Form 1099 DA? The scope of this is broker effectuated disposition. So in 2025, what you're most likely to see is that your proceeds are getting reported, and in many times your basis may be left absent or be marked as zero. And that's because basis reporting is often not required or even possible for the broker based off of the regulations and guidance around this. So, that's going to probably be something that comes as a little surprise when you open the 1099 DA and you start looking at this, and you may see your proceeds getting reported and your cost base is not getting reported. So that is one of the big gaps that you're going to see. There are other gaps in this form in terms of, what even has to be reported from that perspective. We're going to get into that here in a bit. So, the biggest mistake when you get this form is usually one of two things. It's looking at the form and saying, this is obviously incorrect. I'm going to ignore it and assume that in the future, they're going to have to send me a corrected form. That is going to be a big mistake because, like I said, most of the time where, there may not be full reporting, where maybe you don't see your cost basis information, that's actually by design. And you should not be anticipating that that's going to be corrected. You are actually going to have to correctly report the 1099 DA and your actual cost basis following a certain methodology on Form 8949. So number one is, don't assume that, if this 1099 DA is not fully accurate for you as a taxpayer, that it can be disregarded or ignored. And, another mistake would be just conceding to what's on the 1099 DA and just blindly filing that. Oftentimes, this can lead to a lot of issues, actually. Number one, obviously, if your cost basis is understated, you can be over reporting the gains on those transactions. But what's really interesting is if you just blindly report the 1099 DA, you can actually have a tax outcome where you over report the capital gains on the transactions that are on the 1099 DA that do not have basis, but you also underreport your overall transactions on your tax return if you just report what's on the 1099 DA and don't report other transactions and other activity in non-custodial wallets or just other transaction types that aren't reportable that may be taxable. So you can't just ignore the 1099 DA, but you also cannot just blindly rely on it and concede to its accuracy. What you need to do as a taxpayer is your own accounting and reconciliation against the 1099 DA. But it's very important when you're going through this process that you also don't blindly rely on any crypto accounting software, that you're properly doing the reconciliation and due diligence and documentation around your cost basis methodology and all these considerations. So let's get into a bit more on, what's covered in the 1099 DA. Again, the DA is not comprehensive. It's only reflecting the transactions that the broker is treated as affecting under these new regulations. So if you are transferring from your non-custodial wallets onto exchanges, they're not going to have the basis information related to the transfers that aren't taking place on their exchange. Similarly, if you're going through multiple brokers, there can be issues in the data continuity there as well. And there's certain types of transactions that are not going to be reported on the 1099 DA, such as wrapping and unwrapping and other types of transactions. So again, there's not every type of transaction is going to be reported on here. And it's going to be on you as a taxpayer to make sure that all of these transactions are reported, but that also the 1099 DA is also reported to the IRS. So we touched on the non-covered assets here. So I'm not gonna harp on that much more. Let's go over the steps to what you need to do now when you receive the 1099 DA. Now that we understand what it is, what it doesn't cover, and why you need to be doing this. Number one is to reconcile the reported proceeds to your actual accounting. So obviously this requires first that you have your accounting complete. At Camuso CPA, we're constantly reconstructing cost basis for digital asset investors, sometimes for 10 years or more. So, the IRS says there's a 75% non-compliance rate. So there's many people out here now that before they even take these steps may need to do a cost basis reconstruction to get their cost basis accurate to be even able to do the accounting and reporting for the 2025 tax year. Once you're at this point, though, step number one is to do the accounting for the 2025 tax year. And really what you're first going to want to do is reconcile the reported proceeds with your actual accounting. You want to identify transactions that are in your accounting that aren't on the 1099 DA that need to be reported. And then you want to identify the transactions that are included in the 10 DA and that are also in your accounting records. And we want to make sure that those are both reconciled and reported appropriately on 8949. Some risks to where, there can be some mismatches here are, duplicate reporting and reportable events in terms of, the types of transactions and whether or not they'll be included on the 1099 and whether or not they're taxable. And also timing. The Form 1099 DA is going to be in UTC time zone. And as a taxpayer, you'll be reporting within your local time zone. So especially if you traded at year end, if you were loss harvesting, there may be a differential between what the 1099 DA is reporting and what you should be reporting based off of your time zone. So you first want to reconcile out the proceeds and make sure that everything is aligned between the 1099 DA, your accounting records, and what you're actually preparing to file on Form 8949. Then the next step is to start to reconstruct your cost basis and make sure that it's properly reported with each sale. And this is where a lot of taxpayers are going to encounter problems for a few reasons. Number one, like I said, there still is this large non-compliance rate, which means a lot of taxpayers have a lot of catching up to do when it comes to their cost basis calculations in their digital asset accounting. But Even in addition to this, last year we saw revenue procedure 2024-28. Well, at this point, it was, 2 years ago, we saw the revenue procedure 2024-28. And this is another area where a lot of taxpayers are not in compliance and oftentimes unaware of this revenue procedure. And this largely impacts your cost basis calculations. This, I've done separate videos on this revenue procedure, so I'm not going to really delve into the finer details of it. But this revenue procedure shifted from universal cost basis calculations to account level cost basis calculations. There's an allocation process that should have been completed in 2025 at the beginning of the year. And, like I said, many taxpayers still aren't in compliance with this and need to get into compliance with this to ensure that their cost basis calculations are at the account and wallet level and not at the universal level. So, if the next step after reconciling your proceeds with the 1099 DA is to start to make sure that your cost basis is accurately reconciled against these transactions and then appropriately reported on Form 8949 following the correct steps there. But in order to do that, you need to have these accurate cost basis calculations, which is going to mean that all of your digital asset history has to be accounted for and up to date, but that you also need to get into compliance with this revenue procedure to even have an accurate cost basis calculation. So, this is going to be where the rubber meets the road for a lot of taxpayers who realize that they don't have accurate cost basis calculations. And then, reconciling and reporting this 1099 DA can become a much larger undertaking because you're gonna have to go back and address the historical accounting that may have been neglected. So again, it is crucial that the 1099 get reconciled with your accounting and that your assertive position is what you file on your return and that the proceeds and basis as applicable get adjusted on Form 8949 to reflect your true and complete facts and circumstances as a taxpayer. So ultimately, when it comes to your cost basis and when it comes to your entire digital asset transaction history and the reporting obligations associated with it, that is your responsibility as the taxpayer, and substantiating any position you take when it comes to your cost basis, when it comes to your proceeds or anything else, is the burden is on you as a taxpayer. So it's crucial that you take these steps. So let's, hit on a little bit, what is going to happen if you do neglect to do this, if you decide to do nothing. The 1099 DA is going to really be the start of a process for taxpayers that do choose to ignore it. The data will be ingested by the IRS and, processed by the IRS. And then eventually these tax returns by the taxpayers will be filed. And if the information associated with their digital asset activity does not match the 1099 DA, either the proceeds reporting don't match or there's other issues with reporting it, then we can start to see matching notices go out to taxpayers. These will be automated notices likely that'll come out months later, and then you're going to be having to reply to those notices and comply with those. And then if those are ignored, you may be looking at getting proposed adjustments based off of those notices. Or if your responses start to indicate deeper issues, it could also potentially escalate from there with further steps past automated matching notices. So, you don't want to do nothing. You want to make sure that you avoid any matching issues and you don't have to go down this road of dealing with notices or additional scrutiny on your reporting. And the way you do that is by being compliant up front and by accurately reporting up front and reducing the likelihood that you're going to be receiving any of these matching notices or having any of these issues. And really, to do that, your accounting has to be up to date. You have to be in line with the revenue procedure. You have to make sure you have a tax plan and that all your tax positions are aligned and properly reported. So, this is what you need to be doing as a taxpayer. Otherwise, you can expect to start to see tax notices, and to the degree that you have deeper tax issues, those can potentially escalate from there. So, really next steps for investors and founders is number one, the 1099 DAs are right around the corner. So especially if you have accounting to catch up on, you're a little behind the ball already. So you want to, as soon as possible, get your accounting updated, get your cost basis reconstructed, to whatever degree possible that you need to still, comply with the revenue procedure 2024-28, allocate your basis as necessary, and make sure that your accounting and tax positions are bulletproof, fully defensible, and fully documented with detailed audit trails. Then you're in a good position when the 1099 DA comes to start to take the additional steps to reconcile that information with the 1099 DA. So, what we're seeing here, 2026 is what we call at Camuso CPA, the beginning of the digital asset compliance era. And I've done entire separate videos on this. There are a lot of contributing factors that are leading to this shift here in 2026. But one of the big factors that impacts this is the informational reporting rollout that we're seeing with the 1099 DA, and how this is going to impact investors, founders, and businesses that are transacting on chain from an accounting and from a tax reporting standpoint. So, like I said, this is something that we work on closely with investors, founders, and businesses for the better part of a decade at Camuso CPA. And when it comes to reconstructing cost basis, getting in line with the revenue procedure 2024-28, making sure you're in compliance and properly reporting Form 1099 DA, and doing, the tax planning and compliance assessments around historical and future reporting related to your digital asset activity. That is what we can assist with at Camuso CPA. And if that's something that you're looking for and need assistance with, you can visit camusocpa.com, complete our contact us page, and set a time to speak with me directly about your portfolio, your business, and your taxes. So I hope you took some value from this video. Until next time, I'm Patrick Camuso, signing off.